So May, June 2023, paper 22. What is cost center? What is allocation? What is apportionment? Can you tell me what is a cost center?
Cost center is a department in an organization where any item of expenditure would be charged.
Okay, can you tell me what is allocation?
Yeah, 1 minute. Allocation is an item of expenditure that is directly identified from the cost center and allocated.
And apportionment?
Apportionment,
when expenses related to more than one department.
Sorry?
Expenses related more than one department to more
When
than
your
one.
expenses related to more than one department, there is apportionment. Okay, fine. Now there is this question over here, the same question we are continuing. Come on, you can see the question.
Yeah.
Okay, you can see this question very well. If you read the additional information, what is given in the additional information? Read.
The factory overheads.
I have been given the budgeted information for 31st August 2022. Two production department, one is the cutting department and the other is the finishing department, right?
Yeah.
And one is the service department. Correct?
Yeah.
Yeah.
That means they have already found out the factory overheads for the production department and service department. So can you tell me the allocation and apportionment is done or it is yet pending?
It's done now.
Allocation and apportionment is already done.
Yeah.
Yeah.
Okay. Then they have told me that service department overheads are reapportioned on the basis of number of employees. And they have given you these number of employees. What are they asking me to do? What are they asking me to do?
Reapportion service department's overheads to the production departments.
That means they're asking you to reapportion the service department overheads to the production department on suitable basis. How do you do it? So I have the cutting department, I have the finishing department, and I have the service department, right?
So
service department has 31,350.
yeah.
This has to be reapportioned. This has to be reapportioned between which department?
Finishing department and cutting department.
Okay, on what basis?
The service basis of the number of employees.
Here it is written, service department overheads are to be reapportioned on the basis of number of employees. So what will I do?
So you'll do 313. 1 sec.
31,350 will be removed from the service department and it will be distributed among the cutting and finishing department based on the number of employees.
So it will be 31350 into 125 upon 209 for
Ashita, have you watched all videos?
Yeah, but this I'm not understanding.
No, you've not watched them.
I have.
Service department cost has to be reapportioned between the production departments in what ratio?
Or you'll write the ratio 125 upon 209 and
Okay.
80.
See, it is to be reapportioned on the basis of number of employees in each production department. So in cutting department, there is how many employees?
125.
Okay. And in the finishing department, there is how many employees?
84.
Okay. So what is the total number of employees that you have?
1 second, I will tell. 209.
209. This service department has to be reapportioned between cutting and finishing.
Yeah.
So that means 31,350 into 125 divided by 209
209.
the cutting department,
Yeah.
and 31,350 into 84 divided by 200
Divided by
will
209.
go to the finishing department.
How?
So how much will it become?
Wait, I will tell. 18,750 for cutting.
For finishing it will be
Yeah, 1 second. 12,600.
total is how much?
31,350.
Okay, then you will get your total overheads.
Oh, okay. Yeah.
It is 292, 570
Hmm.
and 201, 840.
Okay, I understood.
Now what do you have to find out?
OAR, na?
How will you find the OIR?
Budgeted overheads upon budgeted activity level.
Budgeted overheads upon budgeted activity level. Do it.
Okay. Miss, so for cutting department, you have to do 292. This the budget, the total overheads bill over here is 292,570 upon 9,400 because it's labor intensive.
Why labor intensive? Which hours are more?
It's given your labor hours are more.
Darling, see over here. Which hours are more?
Oh, sorry, machine hour is more, my bad. So it's 17,900.
And over here?
Over here, you have to do 201,840 upon 7,420, which is labor hours is more.
This is machine hours and this is labor hours.
Oh.
So what will you get?
Yeah, I'm telling.
I read and you can answer.
16.3446 is for the first one.
16.34. What will you write? $16.34
Yeah,
per machine hour.
per machine hour. And then for finishing department, Ira said.
Done to.
$27.20 per labor hour. Are you with me?
Yeah.
Are you with me?
Yeah.
Okay. Now what do they want from us? They have given us the actual results. This is budgeted overheads. This is budgeted activity level. Yeah. Here also budgeted overheads, budgeted activity level. And you have found out the overhead absorption rate. You have found out the overhead absorption rate. Are you with me?
Yeah.
Now, what do they want you to find? Under absorption or over absorption of overheads. What do they want you to find out?
The absorption of overhead.
Under absorption and over absorption of overheads. Now, this is
Yeah.
the most important part, and it is basically formula based. Okay, so I want you to do it along with me. One is the cutting department and one is the finishing department. Yeah.
Hmm.
Okay, first thing, what will you write in this?
You
You
write
want to find out under absorbed, over absorbed. Am I correct?
Oh.
You want to find out under absorbed, over absorbed. So the first thing that you will write is the actual overheads. What will you write?
Actual overhead.
Can you tell me what is the actual overheads?
Cutting department is 273,820.
How did you get 273?
It's
no.
oh, that's production. Sorry. The actual overhead is 312,600.
Yeah, the actual overheads over here, if you see, they've given you, these are your actual results.
Yeah,
So your
yeah, yeah.
actual overheads for cutting department is 312,600.
600.
And actual overheads for the finishing department is how much?
193,400.
It is 193,400. Do not get confused between your actuals and budgeted. Budgeted is estimated. Actual is what? Actual
Actual.
is
That's
actual. Budget is
yeah.
estimated. Actual is actual. Okay. After you write your actual overheads, you will write overheads absorbed. What will you write? How do you get the overheads that you have absorbed?
You do OAR into the actual
You
overhead.
will do OAR multiplied by actual activity level.
Okay.
What will you do? OAR
OAR multiplied by
multiplied
actual.
by the actual activity level. Understand, OAR is a predetermined rate which you get by budgeted overheads divided by budgeted activity level. So you will do OAR multiplied by actual activity level. Come on. Tell me what is your OAR for cutting department? $16.34
16.34.
multiplied by actual activity level. What is the actual activity level? It is machine hours, so you will take which activity level?
Machine hours.
Machine hours.
So what is the machine hours?
17,200.
So what is the amount that is coming? 3131552. No. 17,200 into 16.34.
281,048.
281,048.
48. Yeah.
So can you tell me your actual overheads was 312,000 something, and you have absorbed. When I say absorbed, you can also say you have recovered. What you've done? You have recovered. How much have you recovered?
You minus and then you get.
You have recovered 281,048. So have you
Yeah.
recovered more or less?
Less.
Less.
You have recovered. Absorb means recovered. So you have recovered less. So it is under absorbed or over absorbed?
Under absorbed.
It is under absorbed. Under absorbed, or you can say under recovered. Are you with me?
Yeah.
Can you do the same thing for finishing?
Yeah. So you have to do 27.20 into 7210 which is equal to 196112. You're on mute.
Hours multiplied by your OAR 27.20. What is the amount that you're getting?
196112.
196112. Okay, now tell me, how will you
So you
analyze?
have over absorbed, no? In
Your
this.
actual overheads is 193,400. Your overheads absorbed is 196,112. That means you've recovered more. So if you've recovered more, it is what? Over absorption. You have recovered more. So it is what?
Over.
Over absorption. After you found the overhead under absorbed or over absorbed, now they want you to calculate the profit for 1 month. If you see, it is only 1 month. Can you see that? It is only for 1 month. Come on, let's read it properly. What are they telling us? They are telling at a second factory, marginal costing is used. A single product X is manufactured. However, this demand for this product has fallen down recently due to competition. Okay. You have direct material, direct labor, and you have contribution. What is the contribution? 20. Are you with me?
Yeah.
Normal capacity is how many units? It's 14,000 units per month.
Yeah.
And the factory is currently operating at 75% of the normal capacity. All the units produced are sold. Fixed cost per month is 56,000. Calculate the profit for 1 month. How will you calculate?
So first you will do units
How will you
75%.
calculate?
14,000 into 75% first.
Now come on, tell me the contribution per unit is how much?
20.
Okay, wait.
Contribution per unit is how much?
20.
20. What is the number of units?
14,000.
But how many units are they selling?
5%. So 10,000.
Yeah.
75%. At what capacity are they working?
75%.
75%. So what is 75,000 of 14? 75% of 14,000?
10,000.
Okay, wait.
10,500. So
Yeah.
10,500 is the contribution, is the number of units. So contribution will be 10,500 into 20.
Yeah.
So what is the total contribution? 210,000, right?
Yeah.
Contribution minus fixed cost will give you what?
Profit.
Profit. What is the fixed cost?
56,000.
56,000.
मतलब marginal भी आ गया. 1,54,000.
So the profit is 154,000. Are you with me?
Yeah.
Yeah.
Come. Well understood, right? Contribution minus fixed cost gives you profit. Yeah. Now, You will have option A and option B. Are you with me? Okay, fine. Now, after this, there is no marginal costing or there is no absorption costing. It is just read and application. Whenever you have option A, option B, it is always read and application. What is it?
Read an
Read and
application.
Okay, fine. So come on, read. What are they telling?
Option A.
The directors are considering two options to
Miss,
increase the profit.
Okay.
You have first option, and your first option is telling reduce the selling price by 5%, run a 6-month advertisement campaign at a cost of 1,100 per month, and monthly sales are forecast to increase by 25% on current level. And what do they want us? They want us to find the profit on each option in the first month of production. What do they want from us?
To find profit in the
Profit
first
on each option in the first
Okay.
month of production. Are you all with me?
Yeah.
Now, option 1. What does the option 1 say? Reduce the selling price by 5%. Can you all tell me what is the current selling price? You have the question with you. Go and check. What is the current selling price? Read the question. They might have given you the current selling price. Check what is the current selling price. Check what is current selling price. Come on over here. You know, sales minus variable cost will give you contribution. Are you all with me?
Yeah.
Yeah.
What is the selling price? I don't know. What is the variable cost? Do you know?
No.
20, 10, 30, 40.
How you got 40?
Variable cost? No, 22 plus 18. What is the variable cost? What is the variable cost? 22 plus 18. Ashita, are you with me?
Yeah.
22 plus 18 is the variable cost.
Okay.
So contribution will become how much? Contribution they've told us 20.
20.
So can you give me the sales?
60.
60. So sales minus variable cost gives you contribution, and I want to find out the profit per option. So option A is reduce the selling price by 5%. So I have sales, selling price, units, and this will be total. They want to reduce the selling price by 5%. So if I'm going to reduce the selling price by 5%, so can you tell me 95% of 60 will be how much?
95% of 60. I will tell you.
Reduce the selling price by 5%.
57.
57. How did you get 57?
I did 95% of 60, which is 57.
Okay, what are the number of units that they're going to sell? That I don't know currently. Okay, I'm just reading and I will do it. Are you with me?
Yeah.
Sales minus variable cost. What is the variable cost? Variable cost 40. Are you with me? I will get contribution.
Yeah.
What is the contribution? Sales
30.
minus variable cost is contribution. 57 minus 40 will become how much?
17, sorry.
What is the number of units that I am selling currently?
Four-
75% capacity.
10,500.
So what is the total number of units that I'm selling?
10,500. Okay,
What
wait.
is my total contribution?
You have to do 17 into 10,500, right?
Yes.
178,500.
178,500.
Yeah.
What are they telling? Run a 6 months advertisement campaign at a cost of 1,100 per month.
Okay. Okay.
So from contribution, what will I subtract?
1,100 into 6.
From contribution, I will subtract fixed costs. What
Yeah,
was my
60.
normal fixed costs? 56,000. What is my
Yeah.
normal fixed cost?
56,000.
56,000. And when I am choosing option A, that means I have to do an additional fixed cost.
Yeah.
How much?
6,600.
They want the profit only in the first month. So this advertisement campaign will be how much for 1 month, how much I will have to spend? Additional fixed cost, how much I will have to spend?
1 minute. Only for first month, so 1,100.
1,100. So what will be my profit?
$500 minus 56,000 minus 12140.
Now look over here. If I do this, whatever extra fixed cost that I'm doing over here, I'm reducing my selling price to 57. I'm increasing an additional fixed cost by 1,100. So my monthly sales are forecast to increase by 25% on current level. So what is my current level of sales? Check. What is my current level of sales? What is my current level of sales? 10,500 units? Yeah.
Yeah.
Current level of sales is how much? 10,500 units. So if I do this, I am reducing the selling price by 5%. My sales is going to increase by 25% on the current level. So if I increase 25% on current level, what will be the number of units that I will sell? 10,500 into 125%.
Yeah.
It will
Why
increase.
into 125 you did?
It will increase by 25%. So if 100 is current into 125.
13,125.
So sales will become how much? 13,125.
Yeah.
So what will be my contribution then?
Okay, wait.
223,125.
Yeah.
So what will be my profit? 166,025. Now understand, you need to find the profit in 1 month. Okay? As per option B. What is option B telling? Discontinue product X. So I say, okay, I discontinue product X. Produce a different product. I say, okay, I will produce a different product. Product Y, selling price. Here I'm writing per unit and I will multiply it with units. Okay. So I will get total. Tell me what will be the selling price of product Y. They say it will be 58. I do not know the number of units yet. Yeah? Are you all with
Yeah.
me?
Yeah.
Okay.
Yeah.
It is forecasts that the demand will be such that the factory, it is forecasts that the demand will be such that the factory can operate at 110% of normal capacity. So can you tell me what is the normal capacity of the factory?
Normal
Read the
capacity.
question. Read the question. Read the
50,000.
question. Read the question.
14,000 units.
How much?
14,000 units.
So normal capacity is 40,000 units. So I forecast that the demand will be such that the factory can operate at 110% of the normal capacity. So can you tell me what is 110% of normal capacity? So I would say it is 110% of 14,000 units. So it will be how much?
15,400.
400 units.
Yeah.
Are you with me?
Yeah.
So 15,400 multiplied by 58. The selling price would give you how much? 893,200. Are you with me?
Yep.
What did I do? I just read and applied. There is no accounting in this. It is read and application. I'm repeating again. There is no accounting in this. It is just your English skills. Okay?
Yeah. Mm.
I'll go ahead. Come on, read the next part. Direct point 4. Okay, direct material cost will increase 10% per unit. So what is the direct material cost? 22. So if it is going to increase 10% per unit, so it will be what? 22 into 110%. It is going to increase 10% per unit. So this will become how much? 24.20. What will be the number of units? It is going to remain the same because I am selling same number of units. So what will be the direct material cost? 372,680. Yes. Are you with me?
Yes.
Now I'm read an application. Direct labor costs will remain unchanged. Very good. Thank you so much. What is the direct labor cost?
18.
18. However, the worker will be paid an overtime premium 50% for all work over normal capacity. So come on, tell me what is the normal capacity?
14,000.
14,000. What is the actual capacity, actual units?
14,000. Oh, sorry, 15,400.
15,400. So what is the work above the normal capacity?
1,400.
So work above the normal capacity is 1,400. So for this 1,400 units, how much you're going to give them? Read. For this 1,400 units, how much you're going to give them? Overtime premium of 50%. How much you're going to give them?
Yeah, I thought I was lagging.
Now understand how will you write this? I will write direct labor. What will I write? Direct labor. With me? Are you with me? Ashita and Ira, are you with me?